Good day, everyone. You're welcome to today's Real Estate Insight, and I'll be your facilitator, Joy Adebayo Onikeku. And first of all, the topic we'll be treating is property valuation. We're going to look at the definition, important and methods of valuation we have. This course is a serious one when it comes to real estate matters. In fact, every real estate student out there know the importance of valuation and how serious it is. So let's go down to business. First, we look at the definition of it. So what is property valuation? So I had to go down to this topic to make it simple so that even if I had to explain to a 5-year-old, it will be easier for them to understand, because I understand that we are not real estate background, so different courses and study. Right? So property valuation helps us to assess the actual value of the property. The value of the property can be used to determine the fair market value of the land or landed property. And when we say landed property in real estate, we mean building. So most of the time you'll be hearing the terminologies when it comes to real estate. Then property value includes brand appraisal. That's when you want to do evaluation. Copyright, intellectual properties rights, goodwill, and corporate success in marketing and advertising. So in a nutshell, property valuation, you need it to be able to know the value of your property, not just the value. When you want to value, rather, there are many things that comes to play. So during the course of this training, we're going to see many of them. So now we're going to look at the importance of property valuation. Here I highlighted 5 importance of it. And the first one is either you want to purchase a property, you want to sell, or you want to transfer the property. Because of that, you'll be needing a property valuer to do this job, to have a property valuation. And the second one is property insurance. The third one is because you want to impose taxes. So at the long run, we're going to itemize each of these to know why it is important when it comes to property valuation. The fourth one is property repair, and the fifth one is property issues. So let's take them one after the other. So the first important is either you want to purchase, sell, or transfer the property. And when we are talking about property, it could be land or building. The first one is when you are buying, selling, or transferring property, the last thing you want to do is not knowing the value of the property. Imagine you have a land, and let's say at Adbond, we already know how to place our values. But to a layman, like, how much is my land worth? You have to get a property valuer to be able to do a valuation for you to know the worth of the property. The second one here is, if you do not know the value of your property, you may lose money by paying too much or selling it at a very low price. That's what happens when you don't know the value of your property, if you want to buy or sell or transfer. So the next one here is property insurance. Why do we insure our property, and why is a property valuer needed for insurance? Completing an asset assigned by a third party for insurance purpose is not only a good way to prepare in case of theft or damage to your property, but it can also help to ease your claim if something goes wrong. So when we hear property insurance, it's not only a completed property that you can insure. Let's assume you want to start a building project. You can also insure that, because I was speaking with an insurance expert that, do you do that? So in their own line of thought, if you know the value of what the project will encompass, that's the value of what they will insure, so that when anything goes wrong, they will be responsible to either for you to claim the premium, that's what it's called, when anything goes wrong after you have insured. So the next one here is imposition of taxes. In this particular aspect, the government authority always use property valuation to impose taxes. most of our houses, we see a property team, they call it property identification number, PIN. So when you go to the government authority, they ask what's your PIN. That's the property identification number. Just like we have a NIM for personal individual, properties also have their own identification number, because no two properties are same like that. So property valuation helps in the calculation of taxes such as property taxes, wealth taxes, income taxes, and so on. So if government want to carry out exercise to impose taxes, they always send valuers, say, oh, go and check, go and value each of these property and know what is what. So if you come that this is what your property worth, they will always bring an external valuer to check if what you're saying is true or not. The fourth one here, we have property repair, another important. It is generally assumed that adding value and improvements to a property will increase its value. As you all know, you can't improve a property and you won't get its value. If a property is deteriorating, by the time you add some improvements, just like when we get to this building, this office in particular, the way it was looking, if it was that way, because it was that way rather, the fee was low. Assuming they've put all this improvement, it will definitely go higher. They won't sell, they won't rent it out as it was then. However, before making any such additions, make sure you are investing in the right improvements. That's the essence of a property valuer. They check the before and the after. So by the time you are either subletting or reselling or whatever, you will know what value to place on the property because of the improvements you have done. And it also says, as a result, the scale property valuer will give you the true value of your property, which can be used to plan all the changes you want to make. So you actually need a property valuer when you're about to repair, and even after you repair, to know what plan is that to sell, to know the value, and probably you are doing some calculation at the end of the year to know whatever you have planned. The fifth one here is property issues. There are many issues when it comes to property. When you go to court these days, you see a lot of cases of property, especially when it comes to a deceased person that didn't leave a will. So what they do, they do a probate valuation because there was no will left. So what most is either the beneficiaries or the next of kin, what they do, that because there is no will, we are going to do a probate valuation. That's a method of valuation that is done when it comes to valuing a property. So property this way are fairly common these days. Like I mentioned that in most cases when you go to court, they are telling you, oh, these people are fighting over this property, these people are fighting over that property. So what do we do next? The first thing is probate valuation. How many beneficiaries do we have? How do we share it? After the government take out their own taxes, their own fee from the value, say that they are selling, or the beneficiary pay from their own pocket so that they can retain such property. It is important to have the property evaluated to distribute it fairly. So this is very important. So what should the value of the property be? That's after you have a property. How do you determine the value? So these are the things you use to gather the information to do a real property valuation. First, you do an accurate assessment, which is collection of the data. You start by when was the property. If it's land, it's very easy. You just get to the site, do your measurement. Even if you have been told that, oh, this is the land site, imagine there was no survey on the land. Definitely, as a valuer, you need to get to site. You don't assume that, oh, this is what is given. As a valuer, you don't go by assumptions. Even if you go, it will be limited. Maybe out of your accuracy, you may have at least 85% accuracy, because no value is 100%. You still have to add some assumptions. So personal data related to the specific property. After this training, I'm going to show you how a property valuation is done, because we won't be able to put this to the public. So each and every one of us will go through it at the end of the chain. So you get the data of the property, starting with how long has building been built, what are the features, and so on. So that's the personal data. So using one of the methods of valuation to determine the value of the property. So we are going to go into the methods of valuation right now. The first one we have here is cost method. Cost method. So this is used, let's assume there are no comparison that, oh, there is a property here. So examples of where you can use cost method. Let's say you have a palace, and in that town there are no two palaces there, or a factory. You can't get any other factory in that location. So what you do is use cost method. That's when you can apply this method of valuation. The pricing technique assumes that there is a reasonable buyer that a reasonable buyer will not pay more than the cost of purchasing comparable house and building a comparable structure. So what this simply means, I'll just explain that if you don't have a comparable structure, you have to cost it on your own. Go to the market, that's where we have fair market value. What does this cost? Depreciate it at the end of the day by checking what it costs from by own. I'll use another example is the popular Eco Hotel and suite that we have. When we want to do the valuation, we always go, because I've been involved in one of these valuation of it. So what we do a cost valuation, because there are no comparable hotels around there like it. So we go as costing the spoons that are in the hotel, the curtains, the ACs, the flooring, the walls, everything that it has. So to evaluate the value of the property, the cost method considers the cost of the land and the cost of relocating the property. So what this does, let's say you want to erect such hotel in another place. Valuing the first one will give you an idea of what the other one will cost. That's the essence of it. So we have income capitalization method. So what this gives us is, let's assume you have a property that you get rent, that's rental income on it on a yearly basis. Well, in some cases, some get monthly rental income right now, the ones with short lets, Airbnb and the likes. So what this valuation does, it gives you a projection of your expenses, your projection of your costs, and with that you can be able to arrive with the property valuation. That's why it's called income capitalization method. And the other one we have here is comparison method. This is what most valuers use generally, because they can easily get a comparable method that, oh, a house there was so amount last month, last year. So with that value, they can be able to impose it that, oh, this is the going price of the property in this area. So the market data method is another name for the comparison method. So we have a lot of data when it comes to comparison. You can easily say, oh, these two buildings look alike. Let's check out the market value for this and use that to value this. As the name implies, the comparison method analyzes market data of selling prices to determine the value of a real property. So this method of property appraisals involves comparing a property to recently sold comparable properties. Just like I said, some will go and ask their colleague, oh, this property is sold at so time, how much was it sold for? So with that, they have an idea of what value to place in what they are presently valuing. The comparison method is commonly used when valuing homes and land, so it's easier to use. And like I mentioned, we have another method called probate valuation, probate method. So that is hardly used. Just like I mentioned, that it's when you do have when a deceased person didn't leave a will. That method is always used to know the value of the property and to know who to will it to. So in most of the time, the government coming into that aspect. So the Just like that, I got involved in one valuation method as well at Adebayo. The man left expand of property, so the children, we had to come and do probate valuation. Though the method will go like you are doing normal valuation, but at the end, you know why you are doing it. So most of the time, people ask, what is the best method to use? There are no best method when it comes to valuation. It's always determined by what you want to use it for. Are you using it for insurance purpose? Then you will know, oh, it's for either replacement method or reinstatement. That's old for old or new for old. If your property is damaged, they will ask you what method you want that. Do you want it to be rebuilt? That's the insurance people. Or you want us to just get a similar property and buy a used one. Just like when they are insuring a car. If you are doing comprehensive now, they'll definitely buy you a new one. But it still depends, when it comes to comprehensive again, it still depends on whether you are getting a fairly used or what you are insuring for is to get new. That's when we have new for new or old for new. That's replacements. So the best technique is determined by the type and the use of the property, as well as the availability of information. So that tells you that you can't just say, oh, this is the method I want to use. You must first ask the client, what do you want to use it for? Like for bankers, when it comes to a financial institution, they will ask you if you want to use your property as a collateral, they will call a valuer. Most of the time, some banks have the property section in their banks. They just call one of their valuer, go and check this property. What's it worth? Before they can give you money from the bank. So they take that as the collateral. In that aspect, they use for sale value. That's always 2/3 of the value of the land, of the property rather, land or property in which case. So let's assume the property is worth 150 million. By the time the bank wants to, after insuring, they will tell you the for sale value is 100 million. That's the property they can easily liquidate, the amount rather, they can easily liquidate the property when you default in the payment of the loan. So who are the people that need this property valuation? Mortgage lenders, just like the banks, the financial institution. So they need it. Investors, just you and I that, oh, I want to invest. What is it? What's its value? What can it get? So we start comparing. The insurance, like the insurance company. Then real estate buyers and sellers all rely on accurate property valuation. So with this, I come to the end of the training. So if you have any question, suggestion, opinions, feel free to drop it at the comment section. Thank you for your time.